and it's the 19th of September. I hope you're doing great and you're having yourselves a wonderful time so far. And definitely we condole those that have lost loved ones. And today, in a special way, of course, we condole the Kingdom of the United Kingdom, of course, as they get to bury the Queen today, Her Majesty Queen Elizabeth II. Our condolences, of course, and our sympathies go with them wherever they are. And of course, today it is a Monday. We are back, of course, with the financial markets. Our usually stock markets close on Friday, and most of other financial markets close, particularly those that are on the Uganda Securities Exchange. You're looking at the Nairobi Securities Exchange. You're looking at also other markets like the secondary trading of treasury bonds and the treasury bills. All that business closes on Friday, and we get to open up back again on Monday. And of course, it's a new week, a new kind of spirit has to arise within us if we are to conquer this week again. This is Financial Markets, where we look mainly at investments in the different arms of financial markets. And on the show, we particularly are interested in the stock market, and that is here in Uganda and within the region and the continent as a whole. And we want to see that our markets can grow and realize the dream of the Capital Markets Authority to have at least half of the populations in our countries here in Africa with investments in the financial markets. And we talk about the stock market in particular being one of the things that really indicate the performance of a particular economy. And we are talking about economies like the United States of America and China and so many others that have very vibrant stock markets. We want the same for our economy here in East Africa and in Uganda in particular. And we try to help you to understand the markets and also get to know the current trends within the markets, and also get to know where people are making money, where people are making losses, and you get to make yourself the decision on where to invest your money, depending on, of course, your income, depending on how much savings you have, your financial goals as an individual. We don't coerce you really to come and invest, but we just kind of put stuff out there for you to get to know that actually there are platforms that exist that are there for you to help get to grow your income and of course increase your portfolio of investment. And rather than, of course, make decisions for you, we point out opportunities, gaps, and so many other things that could be lacking that you could take advantage of and make that next big move of investment. Remember to follow us now on our Twitter handle, that is at Smart24TV, for more business content like this and for us to engage in conversations that matter, and that is on business matters here in Uganda. You can also follow the hashtag of Financial Markets for your latest on the financial markets here in East Africa and whatever we talk about here on the show. You can visit still our website at www.smart24tv.com for more information as well. You can also of course, visit our live stream on YouTube at Smart24 TV Live for all your latest on Smart24 TV. You can also watch our GoTV channel at 394. And still, right now, we are on DSTV channel 372, where we're driving business. And of course, you can check it out as well. Now, today is a Monday, and of course, we try to reflect on how the weekend and the previous week actually was before we set foot into the new week of trading. Now, looking at last week, it was quite choppy trading for the Uganda shilling, which with mid-month effect cooling the demand side, and the unit traded pretty much in no man's land, unable to break below the 3,800 level, and yet struggling to get above the 3,825 level. Now, in the Kenyan market, when you look at the Kenyan shillings, the currency remained flat with very limited pressure as corporates slowly returned to the market after the announcement of the new administration there in Kenya. Kenyan shillings held at 120.40 and 120.60 Kenyan shillings United States dollar. Elsewhere, trading across emerging markets, currencies remained volatile as the dollar strength continued to dominate over the ongoing global inflation concerns. Now, in the domestic fixed income markets, the yields were held flat in the treasury bill auctions as Bank of Uganda was seen managing upward pressure on the yields by cutting off what was seen as an outlier bids on the 91-day and 182-day treasury bills that were auctioned last week. Now, in order to make up for the shortfall, the central bank scooped over and above what was 64-day tenor. Now, yields cleared for the 91-day treasury bills at 9.002%, and for the 182-day bill, that is 3 months bill, the yields scooped up to 11.499%. Whereas when you look at the 364 bill, that is the 1 year bill, it scooped up to 14.000%, respectively. Now, in the global financial markets, the dollar continued its rally, inflicting pain almost everywhere in the market as other currencies crumbled under. The greenback up nearly 15% against a basket of currencies, including the euro. And speaking of the euro was crashing to almost a 2-decade low, and the pound sterling to its lowest level in nearly the last 40 years. Now, the outlook for the shillings indicate sideways trading action, which muted demand as markets continue to be restrained by the lukewarm economic indicators. And of course, this is data from Alpha Capital, which you can still find on several platforms as well. But generally speaking, there was a slight decline in the escalating strength of the dollar against the Ugandan shilling as well as against the Kenyan shilling. And we're seeing the Kenyan shilling really return to normalcy very quickly, but not yet to where we used to have it at 120 Kenyan shillings per United States dollar there. Now, when we look at the primary markets here on the debt market instruments here in Uganda, according to the quarterly bulletin for the Capital Markets Authority, the treasury bills and bonds that were issued totaled up to 2.6 trillion in the second quarter for the primary market, and that is from the 3.1 trillion that were issued back in the first quarter, which indicates a growth of about 16.6% in terms of the issuance of the debt instruments here at Bank of Uganda on the primary market. The debt issuance decreased because of, among other factors, the rejection of bids that were deemed to be highly priced with very high interest rates there, or coupon rates charged by the bidders. And we are seeing that the trend has been quite fluctuating for the last 4 quarters. For example, in the second quarter of 2021, the bills and bonds that were issued were worth 2.805 trillion, and that after the second quarter. In the third quarter, the bonds and bills issuance went up to 3.3 trillion Ugandan shillings, and then in the fourth quarter slightly declined to 2.7 trillion. In the first quarter, we have seen it climbing to over 3.1 trillion Ugandan shillings, and in the second quarter falling to the lowest within the last 1 year at 2.596 trillion. In the primary markets, the 2-year bond yield fell by a small percentage, while other tenors edged upwards. For example, the yields on the 3-year, the 5-year, and the 10-year, as well as the 15 and 20-year treasury bonds went up from 12.1% for the 3-year bond to over about 12.4%, and that was a 0.3% increase in the yield of the 3-year bond. In the terms of the 5-year bond, it went from 14% to 14.5% from the second quarter, in the second quarter from the first quarter, and then the 10-year bond went from 14.4% to over 13.8%. That was a decline registered there. Actually, no, it's from 13.5% to 13.8% on the 10-year bond, whereas on the 15-year bond from 14.4% to 14.5%, and in the 20-year bond we are seeing a growth from 16% to 70% yield there on the primary market. This increase in the yield is partly explained by the recent central bank rate increments, and that pointed out to the tightening of the monetary policy by the Bank of Uganda to tame inflation. Now, that said, the 2-year bond sold for 9.9% in the second quarter, and that was compared to the average of 10.5% in the first quarter, which is a decline, of course. But on the annualized basis, looking exactly 1 year back in the second quarter of 2021, the 2-year, 3-year, and 5-year treasury bonds fell significantly from 12.3% for the 2-year bond to about 9.9% on the 2-year bond, and then from 12.8% on the 3-year bond to about 12.4% in the 3-year bond in the second quarter 2022. In the 5-year bond, it fell from 15.1% in the second quarter in 2021 to 14.5% in the second quarter 2022. And on the other side, the yield for the 10 and 15-year bond on the annualized basis, that's exactly 1 year back, comparing the yields went up for these longer term bonds, as we can see, from 13.7% for the 10-year bond to 13.8% the year 2022, and then 14.4% to 14.5% for the 20-year bond, the 15-year bond, that is from the year 2021 to the year 2022. And that is as regards the primary market activity. Now, if you're wondering what this is all about, this is the treasury bond and treasury bill instrument segment of the financial markets. As we know, the financial markets join borrowers and lenders, and when government is looking for money under its fiscal policies, it looks into borrowing as one of the means. And when you look at domestic borrowing, it takes over for a very big percentage of government borrowing. Recently, we have even seen a much higher growth in the domestic borrowing. How does the government borrow? It borrows through the Bank of Uganda, which is government's financial institution, formal financial institution, and the Bank of Uganda auctions certain instruments, that is the treasury bills for the short term, that is 91 days, 182 days, and 364-day instruments that are auctioned at Bank of Uganda, even much more several times, every after about 2 weeks. And then for the longer term, that's the treasury bonds. They start from 2 years. We have 3 years. We have 5 years. We have 10 years, 15 years, and 20-year financial instruments. And all these are loans given to government on the primary market, issued by the government on the primary market through Bank of Uganda. Now, these yields or the interest rates are determined by bidders, and these bidders, usually we call them the competitive bidders, who come with 200 million, more than 200 million shillings worth of bonds or bills, and these determine the rate of return of these financial instruments. The other people below 200 million are the non-competitive bidders, and these non-competitive bidders on the primary market come in without a say on the return, on the rate of return, but rather they just have to go with whatever the Bank of Uganda determines as the rate of return from the competitive bidders. And of course, these non-competitive bidders range from 100,000 to 200 million shillings. That's the amount of money you can be able to lend to government on the primary market. And on the primary market, you're directly interacting with Bank of Uganda via either a primary dealer or a stock exchange, which is the Uganda Securities Exchange in this case, or Altex East Africa, who are also another exchange, a private exchange here in Uganda. And so that was the performance based on the primary market for the second quarter of the debt instruments. When we move to the secondary market activity for the debt instruments, the value of government bonds traded on the secondary market. Now, when we talk about the secondary market, for starters, we are coming from the primary market onto the secondary market, where we are seeing people who have bought these bills and bonds on the primary market can now sell these bills and bonds on the secondary market at an interest as well. So if you have missed the primary market offer, or you have not been able to bid at 200 million and so on as a competitive investor, you can still come onto the secondary market, where people who have already bought the instruments can be able to sell them to the public or to individuals and institutions. And this secondary market activity grew by 67.4%. That is to over 16.2 trillion in the second quarter of 2022, from 9.7 trillion in the first quarter of 2022. Average monthly turnover as well grew to about 5.4 trillion Ugandan shillings in the review period, from 3.2 trillion Ugandan shillings previously. Additionally, the government bond turnover ratio of second quarter 2022 stood at 68.8%, and compared with about 43.6% in the first quarter of 2022. The growth in the turnover can be attributed to, among other factors, the increased investor appetite for government securities and primary dealership reforms as well. So we're seeing that the appetite for the debt instruments has been increasing because, of course, of inflation and many other problems that are harming the other arms of financial markets. But we're seeing that people are running to probably the debt instruments that seem to be a much safer haven for investments at the moment. On the annualized basis, that is basing on exactly 1 year ago, comparing the performance back in the second quarter in 2021 on the secondary market activity basis, the government bond turnover on the secondary market increased by 31.7%, from 12.3 trillion Ugandan shillings in the second quarter of 2021 to 16.2 trillion in the period under review. The increase in the turnover still can be attributed to, among other things, the improved investor appetite for government securities and the primary dealer reforms there that are encouraging people to invest more in the treasury bond and treasury bill market. And when you look at the trend, we are seeing the highest amount so far that has been traded on the secondary market since 2018. In 2018, during the second quarter, we had about 1.27 trillion that was traded in this quarter, and we're comparing that to over 16.2 trillion within the second quarter of 2022. That's a very huge growth there, more than 100% growth within the span of 4 years here on the Ugandan secondary market activity for the debt instruments. Now, my friend, if you're out there and wondering how you can be part of this, these are what we call the debt instruments, or the debt market under the financial markets, where we looking at lending government on either long-term or short-term basis. Participating is very, very simple. All you need to know is how much money are you willing to part with for this particular period of time of interest, and the more you hold the instrument, the more you get the interest. The interest comes in as at an annual rate. That means that you're coming with an interest that comes at the end of the year. So if you get the money right now and you want to know how much interest you have exactly 1 year, that's exactly the rate at which we are calculating that interest. Now, the rates, as I said, are determined by the competitive bidders, because this is an auction where the best dealer or the best individual with the most favorable interest for the government takes it all. And of course, the government as an issuer is looking at the lowest return to be given out. But as you, as an individual, you're looking at the best return for you to be the highest rate of return. And these competitive bidders come and compete for these slots that government issues on the primary market through the Bank of Uganda auctions. Usually the auctions are put in newspapers. If you are very keen at reading newspapers, you will see some of those small boxes or notices by Bank of Uganda. Please don't skip those. Usually those are where they do the announcement for auctions way before the auction takes place, at least 2 weeks before the official day of auctioning. Now, the primary dealers are usually the people that go onto this primary market simply because they have enough money that they've collected from their clients that they can invest in the treasury bond and treasury bills. And some individuals sometimes, these are people who can still go on the primary market. Primary dealers, we have so far in Uganda 8 banks that are licensed to carry out primary dealership. We're talking about DFCU, Bank of Baroda, Centenary Bank, Stanbic Bank, Standard Chartered, United Bank for Africa, we have Absa Bank, we have Standard Chartered, I've already mentioned that, and then we also have Housing Finance Bank. Those are some of the banks that are licensed to carry out primary dealership. And you can approach these banks. If you are an account holder with these banks, if you are banking with these banks, you can go ahead and actually ask for some of these services. They will be availed to you in particular if you're interested in these markets. One notable fact about the debt instruments is that they are much safer, and that the return, like I've said, is an annual rate of return that can be apportioned into two. Meaning if you have a bond for 10 years, you're expecting something at the end of 6 months, and that's half the annual interest that you're supposed to earn on your bill or your treasury bond. And when you are getting this interest and you feel like it's time for you to actually get rid of the bond and get back your initial deposit, it is as simple as listing that bond or instrument on the secondary market, where it can be transferred from you to another investor. Very simple way of looking at it is that it is a mechanism for borrowing, and governments borrow in order to finance government business. But it's also a mechanism for saving, for individuals looking at saving their money. It is a way to encourage you to save and get a return on your saving. And I hope that was enlightening. We are going to take a quick break, and we will return with more on the debt market, but as well we will peer into now the stock markets as well, here in Uganda as well as on the Nairobi Stock Exchange. Stay with us, we'll be right back.